Hello everyone, welcome to this lesson where we are going to talk about chart patterns. Now these are more interesting. We have looked at the candles, we have looked at trend lines, and we have looked at support and resistance. So now we need to look at chart patterns that form as a result of the interaction or price action. Now patterns are interesting because they are more predictable when you find them and they are easier to trade. So they can give you an idea of where the market is going at any given point in time. So we need to start off by looking at what the patterns that we see would be showing. So what is a chart pattern? We say these are formations of a group of candles that produce discernible shapes from which market participants can gauge likely direction of price action. So through interaction of candles, they form shapes and patterns, which you can then look at and say, okay, this pattern looks like this. And if I am going to trade it, I'm expecting that it will bring this result. And that result will give you a predictable profit that you can pursue. And then you need to consider the conditions that must be present leading into a pattern, like candlestick trading formations that we did previously. It's not about finding the chart pattern, but finding it in the right place. So in other words, there must be a trend before you consider a pattern. If it's not appearing in a right trend, then you need to ignore it. So it can either be a downtrend or an uptrend. Or in other cases, it can also be in a hold trend that you'll be able to look at. Then the pattern must form after the trend. After it's formed, then there must be a breakout point. This is where the pattern ceases to be or ceases to continue, and price shows that it's moving in a different direction. After the break of a pattern, the trend would change into another direction. So patterns can be divided into continuation patterns. These are where price moves in the direction that has been set before the price moved into the pattern. Then there's reversal patterns. These act as patterns that drive the price in the opposite direction than the direction that it was moving into when the pattern was formed. Then patterns provide great entry or exit points for traders and investors. They can be bullish or bearish. Patterns can be seen on different time frames from 1-minute charts to monthly charts. Usually 1-minute charts are used by people who do forex trading, and maybe some who do day trading for shares. Then they can also be monthly charts, which usually investors can take interest in. So usually investors work with weekly and monthly charts to set their buy or sell levels. So the longer the chart, the longer the trade that forms from it. And patterns used in combination with candlesticks and trend line formations usually provide great opportunity to profit from. So remember, we have looked at support and resistance. We have looked at candlestick formations that are either reversals or continuation or holds. So imagine if you find a candlestick formation at support and a breaking of a trend to a different direction at the same place, and you have a pattern that has been formed. So it's like you're having 3 confirmations, which is great for profitability and confidence to enter a position. So patterns are low risk and high reward entry points. But this does not mean that you are going to trade them as completely completely certain that they're going to happen. Every trade that you enter into, you must think to say, what if things don't go as I expect? What am I going to do? Where am I looking to take that action? So those are things that you need to consider before you get into a trade. There is no 100% guarantee, as anything can happen. You might be in a good company, then they announce that they have fired their CEO, then suddenly prices changes direction. If you are looking at it bullish, then it turns. You also need to consider things like economy. What the economy does has an influence on the companies and how they perform. So the pattern that you are looking at can always break because of external or greater factors that are being looked into. So let's see, moving on. So this is the setup that we would find for a continuation pattern. So the first one we are looking at here is the bullish continuation. So you have a price trending upwards, then the price gets into a pattern. When it gets into that pattern, then it moves again to continue the trend that it was in. So the entry point would be the point where the price moves into the pattern, which we can only see after the pattern is formed. Then the breakout point is the point where we can see that the price is leaving the pattern. Then it continues on the trend. For a bearish continuation, we're looking at price that is going down. Then it enters into a pattern. Then it breaks at some point. Then it continues on the downtrend. So these are the characteristics of a continuation pattern. Then we have a reversal pattern. Now, like the name suggests, these act to reverse the direction of the trend. So you have an entry point for them, and you also have an exit or a breakout point. So there's a trend here, a bearish reversal. So bearish reversal has to do with a price that is trending upwards. Then it gets into a pattern. As it leaves that pattern, the prices tend to go downwards. So this is what we mean by reversing. Price was going up, the pattern had it on hold. When it released it, it pushed it downwards. Then the opposite is a bullish reversal, which you find at a downtrend. So price is trending down, enters into a pattern, then it breaks out at some point, and price is now shifted to moving upwards. So this is what you need to consider whenever you are looking at building or designing patterns. Patterns are not easy. It's something that comes with time from looking at charts to say, okay, this might be this that is for me. Some are easy to find, some are much harder to find, but you need to know, especially the ones that are often are reappearing. Those ones can give you a good idea and a good historical view to say when it happened, how long was it, when did it take to break out, after breaking out, did it manage to hold the profitability level that I expected. So that is it for now. We'll look forward to the next lesson as we dig deep into patterns.